Now, the U.S. dollar snapped a 4-day slide, its worst losing streak since April. Its value has lost 2.6% on speculation the U.S. might support the Japanese yen. Now, Secretary Treasury Scott Bessent was asked this morning about a possible intervention. He told CNBC, absolutely not. That appears to have calmed the markets for now, especially after this comment yesterday from President Trump.
I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. I'd want it to be just seek its own level, which is the fair thing to do. You could have it. I could have it go up or go down like a yo-yo.
We don't want that, just for the record. While a weak dollar can help boost U.S. exports, it's also a signal that investors could be hedging their exposure to the United States. Patrick Harker is the former president of the Philadelphia Fed, and he joins us now. Really glad to have you on board today. Mr. Harker, according to Chair Powell, we're going to let the data light the way. Does that mean no interest rate cuts for the foreseeable future now? Because if you'll remember, these markets were still anticipating there would be more cuts, perhaps before Chair Powell leaves in May.
Yeah, thanks for having me. Foreseeable future is an interesting word because a lot is unforeseen given the uncertainty that the Fed is facing right now. So my guess is one more cut is in the cards. The last SEP from the Fed had 2. It's somewhere there, 1 or 2. But I don't think that's going to happen until maybe summer.
So once we have a new Fed chair, the currency markets, we have to talk about them, right? They're absolutely trembling. We just saw the yo-yo of this. President Trump said he's not committed to a strong U.S. dollar. Bessent comes out this morning, contradicts him. And then you have, it seems, this somewhat irrational trade in gold and silver where, I mean, the sky seems to be the limit here. I'm wondering what your takeaway is.
The cloud of uncertainty. People are really struggling with the risks they're facing. There's risk on, risk off. I think at this point, I applaud the Fed for just standing still because given all this uncertainty, the Fed needs to be the steady arm here, the steady organization in the economy. And that's what I think Chair Powell is trying to project.
And I do want to get to the issue of staying steady on those things despite the politics, but I also want to ask you about the bond market. I am wondering if it worries you. I mean, most people have been talking about worries about AI, the dollar trade, unemployment, and yet I happen to think that fiscal policy, not just in the United States, could be the real risk. Am I wrong?
Yep. No. That is the medium to long-term risk. We'll be fine today, we'll be fine tomorrow, but we have to deal with this fiscal issue, and this is what you're seeing the market reflecting. The long end is not coming down. Why would it come down? We're issuing a lot of debt and people aren't clamoring for our debt. So I think in that case, you're not going to see bond prices go up substantially. And as a result, you're going to see rates, long rates stay higher.
And that means very high mortgage rates still, at least for the U.S. public. But do you think there's a broader risk there that this really could end up being a shock to the market, especially if, you know, sometimes some countries might have trouble selling those bonds?
Yeah, that's it, exactly it. And you don't know when it's coming exactly, right? It hits you very quickly when the bond vigilantes come out and they express their opinion through trades. So I think at this point, we should get serious about dealing with the fiscal issues we face in the U.S. and more broadly globally.
Mr. Harker, how do you get anybody's attention? It doesn't matter which country you go to right now. I mean, it doesn't seem like anyone's listening, not just in the United States.
Right. No party's talking about it right now. But I think it's incumbent upon us, the former Fed people. When you're in the Fed, you don't talk about fiscal policy. I'm out as of June, and now I can say loudly we need to deal with this issue. And there are solutions to this issue. My colleagues here at Wharton, at the Penn-Wharton budget model, have practical solutions to deal with the deficit. What we lack is the political will to deal with it. I think what the forcing function is going to be is that the Social Security Trust Fund here in the United States will run dry in about 7 years. We are going to have to deal with it before then.
7 years, it's quite a tipping point. Mr. Harker, can you take us around that table, though, with the Fed? So the Fed chair was categorical. He believes the Fed will remain independent. I note that in today's decision, it was a Trump appointee, Mr. Myron, And somebody, Mr. Waller, who's one of the candidates up to be the next Fed chair, who dissented.
Right.
Are you as confident as Mr. Powell is on the Fed remaining independent through all this?
I am, because my interaction with members of Congress, particularly members of the Senate, they have reflected the strong desire for the Fed to stay independent in monetary policy. The Fed's not independent in everything when it comes to regulation, supervision. There's oversight always from Congress. It's specifically the independence of the monetary policy decision that is critical. And we know this. There's no example of where the wall between the political leadership and monetary policy has been breached, and it's turned out well. That happened in the 70s with us. It's happened around the world today. It never turns out well.
And I will say many people continue to have confidence in the 4 candidates that are up now. They do believe those people will continue to have that Fed policy. You'd agree?
Yeah, I would agree.
Got you. Patrick Harker, great to have you on the day that we do have the Fed decision, and unfortunately so much of the politics seeping into this as well. Patrick Harker for us, appreciate it.